Welcome back everybody to another video. We're back on trading and I took one loss on paper trading account, paper before paper. So let's get straight into it and then we can all go and enjoy the rest of our day. Alright, see. So we first look at the daily, so that we can mark out the previous day's high and low. Here are the high, here are the lows. The highs were swept so we can short, but we didn't short. So then we look at the 4-hour trend to see the general direction. Very bullish for me still. Look at the 1 hour, same thing, still bullish. Enough retracements to still long, even though on the high time frames I do think we need to come and then retrace into some of these fair value gaps. Then on the 30-minute we marked out London session open, London session open, New York session pre-market, and New York session open. Then we marked out London session highs over here and lows over here on the 30 minutes. Then we scaled down to the 5 minutes to look for our entry signals and confluences. So I took this long over here on this candle, a close above these highs based on the London lows being interacted with. But unfortunately, we hit our stop loss today and we turned out to have a loss. I put out my stop loss below this low over here, and take profit was up here targeting the Asian London highs. There's a few things I want to say about this trade. I lost this trade because I took a trade too early in the session, and this was a bit of a weak confluence entry signal because it's on the first candle of the New York session pre-market open, so it didn't really have enough time to interact with the London session lows. But as you can see later, we swept the lows, liquidity sweep, and then we got our 5-minute break of structure, inverse fair value gap here, and a close above around here, which would have given us a nice long setup, or some other confluences maybe, but I'm not going confluence hunting on a trade that I never took now. So let's go over it here. As you can see, we entered on this candle. I'm closing above the fair value gap. As you guys can see, the fair value gap. Let me zoom in a bit for you guys and mark it in a rectangle. Here's a fair value gap. We entered it here. We touched price, entered the fair value gap over there, and then it closed above this high right here, which the fair value gap was in between. So that counted as my break of structure, and we entered right here where my arrow is on this candle, right over here. We put my stop loss below this low here, and my take profit was the London session highs. Take profit 2 was up here. But unfortunately, before any of that could get hit, we swept out my stop loss, and we took a loss of $411. This wasn't supposed to happen. I forgot to cancel my take profits, so I accidentally made $530 from keeping these short limit orders, which were my take profits. But since the position was already closed, it just opened new shorts, and by luck of the draw, price had moved down and I got to close them out in profit. But I'm not counting them because that's a mistake and there's no ways that'll happen in real life. But let's quickly go over what the notes say. So today we took a 2% loss. My bias was bullish, 9.5 out of 10, not bad, what can I say? The bullish higher time frame does need a retracement, but the lower and mid time frames can continue in the uptrend. And why do I say this? As you guys can see, the daily time frame right here, it needs a retracement, probably, unless it retests these highs right here, which it looks like it's probably going to do. 4-hour, man, why is trading V laggy? 4-hour needs a bit less of a retracement because, as you guys can see, this fair value gap was filled, and price has been slowly retracing as we've crept up. And the 30-minute as well, it's even clearer that price has moved up, then retraced a bit, moved up, then retraced a bit. So that's why I say the low and mid time frames can continue in an uptrend. But as we know, high time frames hold higher power, so eventually I'm looking for some sort of a pullback at some time. My entry signal, let's get deep into this. I entered on the interaction with London lows. This was a bad entry because it was too early into the session. The lows were barely touched by the first candle of the New York pre-market open. There was no real liquidity sweep. I should have waited and been more patient for a better setup that did present itself. 4 out of 10. Excuse me. As you can see, we entered right here, which was like, I don't know, 30, 40 minutes. Actually, 5, 10, 15, 20 minutes into New York session open. And because this could be a nice new rule, because we never swept any liquidity in New York session pre-market, I can use on my former strategies rules, which is don't trade 30 minutes or too early into the session, because we do want to see some sort of manipulation, and then as a liquidity sweep, fill some orders, and then the actual trend and the actual movement of the session. So as you guys can see, we should have waited for this liquidity sweep to enter on our long setup. So I gave that a 4 out of 10. Entry confirmation, 5-minute break of structure, and fair value gap. 8 out of 10, not bad. But we used it in the wrong context at the wrong time. Now listen to this. This is some bars. Lower time frame SMC or ICT concepts and medium and high time frame concepts should be utilized within a time or price or trend or some sort of context that the price is showing you for a higher success probability. Let me just show you guys what I mean here. So say the market's like this, in some sort of an uptrend. Say you see a bearish confluence. So there's this fair value gap of this candle. Hold on. As you guys can see, here's my beautiful fair value gap. Bearish confluence. So price retests this fair value gap. But it's a 5-minute confluence and the general trend is up. So we don't want to be shorting based off of one confluence when we're in an uptrend, when we have a bullish bias, when we have a bullish entry signal. Because just because we have a 5-minute entry confirmation doesn't mean the whole trend's going to swap. It needs to be used in context. Say, for example, there's a nice liquidity sweep or something here. We swept these highs, then we get a bearish confluence, you know. Anyways, that was just a little rant by me, but you know, I like teaching. Is kind of fun, and they say teaching is a good way of learning. So I gave this an 8 out of 10. Position management, good, not bad. I wanted to exit at break even because I felt that we were going to hit stop loss, but I stuck to my trading plan. 9 out of 10. My thought process, maybe I'll give that an 8 out of 10. Thought process. I was looking for longs and I entered based off of London lows being interacted with. The trade was within our trading plan, but more patience was required. There was no real pullback or liquidity sweep, which was necessary and which, when did, presented, which was necessary, and when it presented itself, it did offer a greater setup. 6.7 out of 10. So I rated this trade a 6.5 in total. Technically in the demo we're up because of that mistake I made, but I'm not counting it because it's unrealistic. What I mean by my thought process, it was within the plan. My London lows were hit right here, but we kind of we were too close to the London lows as we opened the market, and it was way too early that we entered. We should have waited. More patience was required. I've also lost a lot of live trades because of having less patience. I've been backtesting a lot where I can click, skip forward candles until I can find a nice setup that I like, a high probability setup. But that doesn't actually train your patience for watching the live markets, because I want to trade. I want to get in there, I want to make some money, and I want to be done for the day. But what really we need to do is sit on our hands until a beautiful setup presents itself. There's a mosquito flying around me. And only trade when we have when we have a good context, when all of our confluences line up, when we have a good bias, good entry signal, good entry confirmation, then the market is showing us signs that price is going to do what we think it's going to do. So thank you guys all for watching. I'll see you all maybe tomorrow or whenever the next trade is. Tomorrow's Friday, so there's a high chance I don't trade on Friday because Mondays and Fridays often don't present a very good setup. So I'll have to be extra patient tomorrow. So thank you all for watching, and I'll see you all in the next video. Bye!